Let me talk a little bit about what's going on in the economy. For those of you who were paying attention to the numbers this morning, we saw that housing starts in November fell 18.7%, 1.09 million units. That's annualized, and they were expecting something like 1.25 million. That was down 18.7%. Building permits in November down 5% to 1.02 million units. That was also expected to be higher, around 1.22 million. Also in November, don't forget, in this past week, we got that weak retail sales in November. November was actually down. That was the first November since 2009, or I think 2008, that it was down. In 2008, we were in the midst of the financial crisis. So we were down in November, when November is usually a big month. Last year, retail sales in November were up about 0.5% year over year. In 2014, they were up about 0.4% year over year. We were down this year. Okay, so housing starts down, building permits down, retail sales down. Guess what? Industrial production in November down. Then we had the larger than expected trade deficit in October. Now, the trade deficit is a component in the net export component of GDP, right? We always run trade deficits, so that's a subtraction from GDP. So when the trade deficit is bigger, the subtraction from GDP is larger. So it kind of gives an indication as to what fourth quarter GDP is already starting to look like. And on that note, I will tell you that the Atlanta Fed, they have this statistic called GDP Now. If you go to that St. Louis Fed, their FRED database, you could type in GDP Now. It'll give you a forecast, and their forecast for fourth quarter is only 2.4% growth. Now compare that to third quarter growth of 3.2%. So the growth in the economy has slowed down by 25%. Now think about where the stock market was at the end of the third quarter. I don't remember offhand, but the Dow was like, what, 18,000 something, 18,500 or something like that at the end of September. Now where is it? It's 20,000. Yet the economy's growth has slowed down by 25%. We should not even be at where the stock market shouldn't even be at where it was at the end of the third quarter. So it has gotten way ahead of itself. Now I will also make this prediction, as I have recently. The economic numbers are going to continue to slow down, and that's because we are seeing the fiscal flows negative year over year. We are seeing, or I am seeing, the precipitous slowdown in bank lending, loans and leases, and total bank credit. All these things are happening against the backdrop of just wild exuberance. And then finally, as you know, if we're talking about the Trump stimulus, I mean, what is that? I spoke about yesterday that Larry Kudlow is likely to be installed as the chief White House economist. He's going to be the chief of the White House Council of Economic Advisors. Larry Kudlow is a Arthur Laffer supply side economist. All right. Ever since supply side, it has been rare to see growth, annual growth above 3% annually. Larry Kudlow is also a guy who back in 2007 and 2008 and 2009 and 2010, he was one of these guys who was saying the dollar was going to collapse and we were going to get hyperinflation and interest rates were going to spike through the roof because the Fed was printing money. And of course, all that was wrong. The guy is out of paradigm when it comes to understanding the economy, the monetary system. He's not an MMT guy. He doesn't understand. He's going to be heading up the highest economic post at the White House. So and again, if you look at Trump's economic team, I happen to like his geopolitical team. At least I like Rex Tillerson. I like Mike Flynn. But if you look at his economics team, what do you got in there? You got a bunch of fiscal hawks. You got a bunch of budget hawks. You even have some guys, I think, who are, let's go back to the gold standard ideologues. You got these supply siders. You got people who want to privatize Medicare and cut Social Security. I mean, really, you got to look, like I said yesterday, if you're putting together a baseball team and nobody could hit and nobody could catch and nobody could run, if you're putting together a basketball team and nobody could shoot and nobody could dribble, or a football team where nobody could pass and nobody could run, nobody could block, nobody could catch, what do you expect? You're going to win a championship? I don't know. Now, Trump is famous at doing what he wants to do. So maybe he's going to ignore all these guys. It's possible. We'll have to see. But I can only go on right now what I see, which is he's padding his whole entire economic team with fiscal hawks and budget hawks and deficit hawks and all these people who are not, let's face it, we're not going to have a new deal, FDR New Deal. How's he going to build? He's going to rebuild all the infrastructure. It's going to be huge, right? What is it? Giving tax breaks to hedge funds so they could build what they want to build and charge us money to use it? That's a double taxation of the taxpayer. I don't know. I like Trump, but I mean, the economics team that he has put together so far leaves a lot to be desired. The stock market's rally so far seems wildly beyond any justification. And look, if I saw growth at last year's levels, last year at the same time right now, we were 20 billion over the prior year. All right? We're negative year over year right now. If I saw growth like that, and I've said this in the past, I'd see the market up easily 15% this year, if not more, in the coming year. So I don't see it. It doesn't mean it won't happen. We've got to see what happens when Trump takes office. But right now, the economy's slowing down. I'm telling you, the economy's slowing down. And when these numbers start to come in, boom, 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 one after another, the whole strong dollar meme is going to get unwound. Believe me. Same thing with stocks. Watch. Just watch. Patience. It's all it takes is patience. We're going to be right on everything again. We're going to be right on everything again. Bye.